In Money Watch, Wall Street remains unfazed by the hot inflation report. You see it on your screen, the way the markets closed today. The Dow Jones soaring more than 800 points.
The NASDAQ and S&P 500 also had strong days, both up around 2.5%. For more on all this, let's bring in Pete Earle. He is an economist and research fellow at the American Institute for Economic Research. Pete, thanks for being here. So tell us, what's driving the markets today?
Yeah, so we had a pretty bad CPI on top of a not so great PPI yesterday. The market gapped down, which we expected. And then suddenly we had the market just rocket upwards until about 11:30. I've heard a few explanations for why that might have been, but I don't really like the explanation oversold. I'll tell you what I think are the two reasons that account for this big move today on what seems like pretty bad news.
Yeah.
The first is that I think the CPI print in the minds of many investors, represents sort of, or it suggests that we may be near the top. Now, I don't know if that's true or not, but I think a lot of people like that idea that we may be near the inflationary peak, and therefore the Fed won't have to raise much more than it plans. The other is that we've had some earnings. We had Domino's and we had Walgreens, and they were not great, but they weren't as bad as people thought. So I think cautious optimism took control today.
And you never want to look at any one data point, any one market swing as really telling an entire story. But it is interesting that we saw that jump today. How do you expect the Fed to respond to the most recent CPI report? I mean, we're hearing about, red lights, recession's coming sometime in 2023. Maybe we're already there, other parts of the world. I'm guessing you're going to say interest rates will jump. But what's your expectation? By maybe how much?
So a few days ago, if you looked at the market implied policy rates, very wonky market. I won't get into how it works.
I look at it every day.
Right. So market participants expected a 75 basis point raise in November or so, and then maybe a 50 basis point raise in December before the end of the year. Now I think we're definitely looking at two 75 basis point increases. But what comes next year, we'll have to see.
And of course, the Fed is trying to be as careful as possible about how much they raise interest rates, knowing that the effect of too much can cause a severe recession. And since we're talking about recession, Chase CEO Jamie Dimon predicted that we're going to be facing a recession within 6 to 9 months. President Biden has said that there's a possibility of a slight recession. When we're looking at today's market, the CPI report, the projection by the Feds, what's your assessment about the possibility that the pain cuts deep versus is more of a slight recession?
So my view is that right now we're in a mild recession. We're looking at a very strange, by strange I mean very strong, given that GDP is contracting, labor market. I think the really important thing, and I think the thing that we'll be looking at for a turning point, is whether we see hints of a wage price spiral. If it seems like the increase in prices is causing people to ask for increases in wages, and those wage increases are passed on to customers in the form of more prices, I think that speaks to a much worse downturn.
Well, certainly we are hoping that that recession will be as mild as possible, that job will be preserved as much as is absolutely possible while that inflation starts to come down.
Peter, thank you very much.
Thanks for having me.